Hey everyone, welcome back. How are you guys doing? Just doing a quick audio check and then we can get started. Okay, audio seems to be good on my side at least. Do let me know if you have any issues and we can take a look into it. Just quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature as the information or advice given does not take into account your particular objectives, financial situation or needs. Therefore, you should consider the appropriateness of the advice before you act further. CFD and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay. So I think we do have a little bit of a change in plan for this month. I think we're still going to continue with the market outlook until further notice, I guess. Anyway, guys, it's a very interesting day. If you guys have been following the outlook on Monday, we consider, well, at least I consider the whole thing with the whole weaker US dollar and stuff like that to still be in a technical correction. Okay, so we are actually seeing a little bit of a rejection happening yesterday. A bit of follow through is needed today, but I think this is starting to set up a potential continuation of the underlying downtrend that we are currently looking at the Aussie USD, Euro USD, Pound USD. We are actually potentially looking at a bounce of the US dollar itself. We will take a look at gold later on because I haven't actually taken a closer look at gold this week, but I would assume the current situation is going to be applied to that as well. Okay. So good evening, everyone. Hope you guys are doing well. As per usual, do type in your requests if you have any positions that you need to be looked at or any questions regarding trading. This is the time you should be asking that question, not towards the end of the session. So I do have time to answer that for you. So number one, let's take a look at the Aussie USD. We do know the current correction. It's actually limited to 61.8%. I think the outlook, I do mention 70 cents to 70.50 for the resistance this week. That's where the Ichimoku cloud is located as well. So, but if we hide the Ichimoku for a bit and just purely look at it from a technical correction, we have seen the correction run from the 14th, basically 15th of July, all the way up until now. So we had 2 weeks of market correcting itself. On the Aussie USD itself, I'm going to focus more on the 70 cents. We haven't break about 70.50. At this point in time, it's a little bit on the lower side in terms of probability for it to actually break close above 70 cents 50. Unless something major happens, we're not expecting anything major in the market, at least not from the fundamental perspective. So we're going to take a look at this from a really technical point of view, that we are actually anticipating potential continuation to the downside should price close below 69 cents on the daily. Now, if that's going to be on the daily, then the probability would be either tomorrow or on tomorrow's already Thursday. So yeah, it's either tomorrow or Friday that we are actually going to see that close below 69 cents. Now, the question is, are we able to look into what the market presents today? If there's any opportunity to actually go in short. Now, the daily and the hourly is actually going to align tonight, today, depending on where you're from. There's a high probability that, yes, we could potentially see that break below 69 cents, potentially tonight or early morning tomorrow before the switch happened. But I'm really looking at this, and I really want 69 cents to be broken, at least on the daily time frame. Then we could actually start positioning ourselves more for longer term swing trades on the Aussie USD, Euro USD, and the Pound USD as well. Okay, so I still focus on the Aussie USD first. Japanese yen crosses, we'll take a look at it later on, but the focus for tonight would be more on the potential dollar bounce. That's basically what we're looking at. Okay, so for Aussie USD, we got support right now at 69 cents. A daily close below 69 cents, that would actually trigger the stochastics to move below 80, and that would make this overbought. So we would really want to see a break below 69 cents. If we do see that break below 69 cents, then we can actually expect more of a downtrend continuation for this one, for the Aussie USD. And potentially, if we take a look at this one as an ABCD, I'm happy with where we are currently getting rejected at, around 61.8%. So that would be your A, this would be your B, that would be your C. I'll happily take that as a C. We are going to be projecting point D. Now, if we do want to project point D to the downside, I'll hide this later on. But point D, it's pretty much where I drew it there. That's kind of the expectation on how far the Aussie USD could go. Point D would fall around 66 cents on the Aussie USD, around 65.75 to around 66. Okay, so we're gonna highlight this. Definitely looking forward to price coming back towards this region here, for the Aussie USD. So that's the current expectation for the USD. I do expect price to continue to track lower once it breaks below 69 cents on the Aussie USD. So zoom out. You guys feel free to take a screenshot of it, or I'll post this on the Telegram. I've already posted an update on the Telegram channel, by the way. If you guys haven't joined in the Telegram channel, it's bilingual. It's both in English and Bahasa. Post contents in languages. We do have webinars specifically for the Telegram channel every Monday. So if you haven't joined in, the link is going to be on the chat. Feel free to jump in, join in. There's a lot of updates in there, especially stuff like this when the market is starting to align itself. This is you basically don't want to miss out. Anyway, this is the current projection ABCD for the Aussie USD. I'm very happy with where the 61.8% is. Currently rejected. We see that sharp drop from 70 cents yesterday. That's basically what I want to see since Monday's outlook was posted. So I think we are potentially we are very close to the end of the correction. In fact, we could be at the end of the correction already. I'm just timing it so that we could potentially find an entry either today or tomorrow morning. But I think you might get an entry in a couple of hours actually. So this is for swing traders. If you're planning to go short on the Aussie USD, you would definitely want to wait until there's a break below 69 cents. You definitely want to have your stop loss above 70.50. In terms of target level, you could be targeting 67. Okay, that's going to give you about 1-to-1 risk reward ratio, or you could be targeting 66 cents, and that would nearly give you 1-to-2 risk reward ratio. I'll be honest with you, the market right now doesn't factor in what's going on with Taiwan and China. Nancy Pelosi's visit to Taiwan, I think that's a little bit overblown. If there's anything that's going to come out from that, I don't think that's going to be immediate. At least we're not going to see that happening this week. Audio glitching. Let me just do a quick check. Audio. Audio seems to be fine from my side. Let me just tweak it a little bit. Team Octa, can we have a confirmation if audio is good, or just give me 1 second. Okay, give me 1 second. Okay, let's check audio. Is audio coming through okay, or is it too loud? Okay, so our audio is coming through okay now, right? Sounds like a broken old TV coming back from the 1980s. 1980s, the TVs are great, right? I really wish I could still go back to CRTs right now. Okay, I just tweaked the audio. If it's too loud, do let me know. Okay, seems to be great. Okay, so let's go back to the Aussie USD because this is the template going forward with the Euro USD and the Pound USD as well. Okay, good. Audio is good. Then we can continue. Okay, anyway, for those swing traders, if you are planning to go short on this one, if you do want to catch on the downtrend continuation, make sure that we wait for a daily close below 69 cents and definitely want to see the stochastics drop down below 80. That would make this overbought. And then that's where we want to jump in short. But this is current projection for the Aussie USD. Now, if we go into the hourly time frame, taking a look at what the current condition is, we are back below the Ichimoku cloud finally. Okay, so we are finally back below the Ichimoku cloud. Remember that 14th of July. So we had that run from 14th of July all the way up there, and we have basically maintained a position above the Ichimoku cloud. Right now, it has transitioned below the Ichimoku cloud. It has created a new low, right? It's actually broken below this low here. So we are looking at that potential for the trend on the hourly time frame to actually follow through. So right now, this is what we want to keep an eye out on. Also, there's a potential hidden bearish divergence right now developing on it, but it's not quite clear. It's not quite clear, but we do have the same retracement going on today. Market's going to be capped at 78.6%. It could go back up again towards the 100%. So there are two potential scenarios. One, price could continue to go up there and then get rejected, or price could actually get rejected at 78.6. So either scenario, I'm waiting for this one to turn around. So what I'm waiting for the Aussie USD is, if you go by the swing trades, if you are a swing trader, then you want to wait for that daily close. But if you're trading intraday, hold on for a second. Don't jump in long. Don't jump in short right now. We just want to wait for a little bit. It's not going to take long. I can assure you on this one, it's probably going to take maybe a couple of hours. But wait for the stochastics to actually turn back down below 80, and that's where we want to jump in short. So I'll leave those lines there. In terms of correction, we are looking at that 69.50 level. In terms of intraday correction, it's fine. We could actually see price go back up to 69.50. So we want to keep an eye out on 69.50. That's your first resistance. Very, very close right now. Or it could actually go all the way up to 69.75. And ultimately, we do still need to keep 70 cents as the resistance. So you got three resistances tonight. Now, in terms of probability, in terms of where it's likely going to get rejected, I am happy for it to get rejected at 69.50, right? But it's not a matter of price getting rejected. I want to see the momentum turn around. So I really want to see the stochastics come down. So yeah, price could go 69.75, 69.50. I'm happy to wait. Okay, if you are rushing this and you think, you know what, why don't I trade, and get that extra 50, 25, 30 pips, it's completely up to you. But let me just illustrate. If you do go long right now, your stop losses would be here, okay, around 69.20. You could be targeting 69.75, but let's be frank. You need to actually adjust your stop loss a little bit lower. It's actually going to be like that. So you're actually going to be risking twice to get that 25 pips. So around 50 to 60 pips for 30 pips max, I don't think it's worth it. But it's really up to you. So if you have a running position in Aussie USD, if you do have an Aussie USD long, you might want to adjust your stop loss to around 69.20, 69.25. That's completely fine, but I don't like that. If you don't have any positions on Aussie USD, I would rather wait on the Aussie USD. Just wait until it's aligned with what we just saw on the daily time frame. Then I much prefer to be in the same downtrend. I would prefer to go short. I would prefer to sell the Aussie USD rather than buying Aussie USD right now. Okay, so Aussie USD, from my point of view, it's not worth taking that risk to get that extra 25-30 pips. I would just say, you know what, leave it, let it run, let it go up 15-20 pips. If it fails at 69.50, the momentum turns around, that's my cue. I much prefer to go short there between 69.50 to 69.75. So let's assume it's 69.50. I would have my stop loss a little bit higher initially. Okay. Anything above 69.75, I think it should be okay. Around 69.85, or if you're happy with it, go with 70 cents. Remember, in terms of target to the downside, we are targeting 67 and 66. So if I go for I can't even go to 67 right now. Even if you're targeting 68, that's already a lot. You're risking 50 pips for 150 pips gain. Well, that's 1 to 3 risk reward ratio. And if this transition, price does break below 69 cents, then you can obviously turn this into a swing trade, all the way 67 if you want to. It's going to be so worth it if you're just patient with the if you're patient with the Aussie USD. It's going to be so worth it because you're looking at around 50 pips risk. Even if you want to have it at 60, have it at 70 cents, 70.50, that's still an okay risk because you're still looking at this projection here. You're looking max 100 pips for potential 50 pips gain. So I like what the USD is. I like the rejection. It's 70 cents, and again, I would take my action on AV. If you want to take this in earlier, the momentum is around, have your stop loss above 69.75, then feel free to target whatever you want on this one. You can go for 68, 68.50. Risk reward ratio is still going to be great. Super great, right? So yeah. So the 68.50 risk reward ratio that's going to be great. His stop loss a little bit higher, 70 cents. I'll take it there, right? I can just target 68.75. It's still going to give me about 1 to 1 reward ratio. So yeah, in terms of target, you got 68.50, 68, 67, 66. Up to you. This one is convertible. It could be a day trade that you can extend into more of a swing trade. I really like where the Aussie USD it's doing right now. I'm just waiting for that rejection to happen. Obviously, if price does close above 69.75 on the hourly time frame, then there's no go on the hourly trade. We'll still revert back on the potential from the daily trade. Okay, is audio bad? Okay. Let me just glitch out for coming better now. Okay, sound check, guys. Do I lose audio? Let me just check. Sounds okay. Okay, I'm assuming sounds okay right now, right? I'm not hearing myself though. Good. All right, sounds good. Sorry for the interruption. You know, we really have something good here, and then the audio plays out on me. Really, really interesting. Okay, so we're good with the Aussie USD, right? Next up, we're gonna take a look at the Euro USD. So the Euro USD, this is slightly different, all right? We did a webinar on Monday. You guys that jump in on the webinar on Monday, you guys know what's going on here. What's my view on this one? I'm actually gonna get rid of 1.0350. Yeah, I'll leave it there for now. But with the Aussie USD, we had that 61.8% Fibonacci retracement. Yeah, on the Euro USD, this is actually at 50%. At 1.02835, so very close to 1.03. Sounds not great. Okay. Let me try something different. Don't worry. We have time. I'm just gonna tune it. I'd rather fix my audio than keep talking, getting excited for nothing with the audio broken. Okay, just give me 1 second. Test. Okay, audio coming through. I'm trying my best here, but I think my audio on my side is actually pretty okay. Connection is also good on my side, so okay. Sounds good, but it's smaller. Yeah, a lower volume. Yeah, input capture. Let me go up. Okay. Is it much better or previous one is better? I don't normally go with the settings. Okay. So let's get on. I'm not seeing any complaints on audio, so we can go on. Okay. Yes, I'll take a look at gold. I'll take a look at yen crosses. I'm just gonna go through bit by bit. We'll go through the Aussie. We just went through the Aussie USD. Next up, we're gonna go through Euro USD and then the Pound USD, and then gold, and then the yen crosses. So yeah, we'll go through all of them. Don't worry. Okay, with the Aussie USD, we had that 61.8% correction. On Euro USD, we had 50% correction on the Euro USD. So I'm very happy with the whole current situation. The only thing that's slightly different with the Euro USD is that the stochastics didn't actually go up above 80 level. But again, like on the outlook, I'm waiting for this one to cross over below the slow stochastics. Let me bring in the Ichimoku cloud. Okay, we are getting rejected at a Kijun Sen. So this is slightly different. This might be a little bit more of a choppy sideways market condition. The downtrend could resume, but we need a break below 1.01. We're still very far from 1.01 on the Euro USD, but that's basically what's needed for the Euro USD to continue the downtrend. So since 14th of July, we had that correction happen. Since 19th of July, we have been traded in a sideways market condition. We had a rejection from 1.0250. Max it out. Or what? Okay. Anyway, with the Euro USD, this one it's still in a range bound market condition. I'm gonna hide the Ichimoku cloud. I'm actually gonna bring in the weekly pivot. We are currently trading below the weekly pivot for the Euro USD. So we actually do still have support at 1.01. So it's a little bit limited. If you are planning a swing trade on this one, is there an ABCD pattern that we can actually identify on this one? Yeah, there's ABCD. We can project a point D, but point D projection is actually going to be not. Point D projection is actually going to be a little bit shorter. It's just basically around 99 cents on the on the Euro USD. Now Euro USD is a little bit unique because for point D to happen, we basically need to see price goes back to parity again with the US dollar, and it's actually going to be a tough one because there's actually going to be a lot of support for Euro USD. Okay, so unlike the Aussie USD, I'm not that keen on shorting the Euro USD aggressively. I would short it. I mean, we'll take a look at the hourly time frame, and there's still an opportunity to short it. But I mean, in terms of target level, we're not going to be ridiculous in terms of our target level, because I'll be honest with you, no matter what, point D, it's likely going to be slightly higher than point B at this point in time. So I don't like to identify this as an ABCD pattern. I would still consider this to be more of a range-bound market condition for the Euro USD, at least on the daily time frame. If we go on to the Euro USD on the hourly time frame, then yeah, it's a slightly different scenario here. We are trading below the Ichimoku cloud. In terms of correction level, I don't think we are quite done yet. I think this is about 38.2. Yeah. So we are getting rejected at around 38.2%. The criteria is this. As long as it doesn't go back up above 1.02, I'll just type it in. As long as Euro remains below 1.02, that's your key thing to remember. As long as Euro remains below 1.02, as long as it doesn't go up above 1.02, then yeah, I mean, short-term wise, we do expect a potential rejection to happen, basically between 1.02 to 1.0225. But as long as it doesn't close above 1.02, then we could actually see the Euro traded lower. Now, in terms of how low the Euro USD could go, you could go short at 1.02, right? Have your stop loss at 1.0230. In terms of target level, don't be too aggressive on the target level on the Euro USD, because in terms of how far it's going to go, it's still likely going to be limited. So best you can go is actually for a 1-to-1 risk to reward ratio. Now, if you take a look at the pip range, it's actually going to be about 30 pips. I'll be honest with you, Euro USD is not the best choice to take advantage of that dollar bounce. If I zoom out a little bit on the Euro USD here, you'll kind of understand what's going on here. There's actually a support trend line that was actually broken. We are actually currently testing that support trend line on the Euro USD. Okay, so this support trend line was broken. We are currently testing that support trend line. That's why there's that criteria. As long as Euro USD remains below 1.02, it doesn't go back up above that support trend line. That's where the potential for a short is going to be. But the range is actually going to be pretty small. It's only going to be about 30 pips up, 30 pips down. I'll be honest with you, I don't quite like where the Euro is. It will only gain traction if it actually goes below 1.0150. Even with price going below 1.0150, your target's going to be limited to 1.01. So there's actually a lot of support for the Euro USD as well. This area here is basically going to be your support. Okay, and the spot's actually going to be huge. Between 1.01. Okay, hopefully this makes sense. So to me, the Euro USD, I don't quite like it. It's slightly different from how the Aussie USD is. To me, I think the Aussie USD presents the better opportunity. So if you can only take one position between Aussie USD or the Euro USD, maybe this could be a consideration between the two of them. Trading is always going to be a zero-sum game. I'm very sorry. It's just how the financial industry works. No one can outdo the market. I'll be honest with you. If I'm profiting, then the theory is someone somewhere around the globe will be losing their money. That's just how finance works, and that's basically just the harsh reality of things. Okay. So we got a request for selling yen. Euro USD is pretty short. Yeah. I'll check CAD Swiss. Not a problem. Just give me a second once I go through the yen crosses and the gold. For Euro USD, it still counts as range bound. Yes. That's my point. Euro USD is still range bound market condition. I don't expect anything to change between 1.01 and 1.0250. My view remains the same. It's going to be very choppy for Euro USD. Go look somewhere else if you want more of a trending market. Euro USD is not it. Okay. Next up is Pound USD. This one's a little bit overextended, but we do have that key resistance that we want to focus on at 1.23. This was also mentioned in the outlook. The 1.23 level was mentioned in the outlook. That was June high. Okay, remind me later. I don't want to restart my computer now. Okay, so we've got June highs, basically where our resistance is 1.23. In terms of correction, we are getting rejected at 78.6. So again, very similar situation with how the Aussie USD is. Let me bring in my Ichimoku cloud. You see where the rejection happens. Unlike the Euro USD, Euro USD doesn't even touch the Ichimoku cloud. The Aussie USD got rejected at the Ichimoku cloud as well. So Pound USD, very similar to Aussie USD. We got a rejection happening at 1.23 at 78.6% at around the Ichimoku cloud. Now, in terms of Pound USD, how do we actually trade this? There's actually a hidden bearish divergence being developed in the Pound USD. So I do expect more of a trend continuation to happen. However, the correction was 78.6%. So from this point, I expect point D to be just slightly below point B, somewhere there. Okay. But let me see if I can get it right. So a little bit more, around 1.1650. Okay, so I'll get rid of it. I'm going to keep that. That's where my projection is for point D. So this one is likely a little bit more flat, but what we need to see is actually a close below 1.2150. Okay, I'll actually just type it out. Confirm daily close below 1.2150. Once we have that confirmed daily close below 1.2150, then that's where I want to go short. For the Pound USD, having my stop loss above 1.23. In terms of target level, then I do want to target around 1. Was it 1.1? Oh, I got rid of that too early. 1.1650. There we go. Okay. Risk reward ratio, if you are patient on this one, you are going to be looking at, this is a swing trade, by the way, this is on the daily scale. We'll take a look at it on the hourly time frame as well, but on the daily scale, if it does break below 1.2150, I want to go short Pound USD. I want to be targeting 1.17, 1.1650. I want to place my risk, my stop loss, just slightly above 1.23. So again, risk reward ratio is actually going to be great. It's actually more than 1 to 2. Risk reward ratio is nearly 1 to 3 risk to reward ratio. On the hourly time frame, we are currently getting stuck at the Ichimoku cloud as well. So we could potentially see a rejection happen for this one. Let's see how far the correction is on the hourly time frame. We got 78.6%. So yeah, I mean, if you are aggressive and you do want to go short, I would prefer for price below Ichimoku cloud. What's price below Ichimoku cloud is 1.2175. 1.2175. Okay. If price move back down below Ichimoku cloud or 1.2175, then I much prefer to go for a short, which is around there. Stop loss is actually going to be there. My target level is going to be there. This one is going to give me a pretty okay trade for an intraday trade. You're risking about 35 pips, maybe to 40 pips for a potential 50 to 60 pips gain. I like this trade, and I like it even more when the stochastics crosses over on the hourly time frame. As I say, with the Aussie USD, with the Aussie USD and the pound USD, I don't think you need to wait that long. I think we're going to see that opportunity happen. If daily closes below 1.2150, stochastic still above 80, do we get in or wait? The stochastic has already crossed, so getting over below 80 is just a matter of time. I think from this perspective, if it does close below 1.2150, I would still go in because the stochastic is already turning down. So ideally, it would happen at the same time. Ideally, that's basically that's what's ideal. If it does happen at the same time, then yeah, it's super duper great. But for me, I like to see a price confirmation. I like to see price closes below 1.2150, and to me, I think that's enough for this one because we have that hidden bearish divergence developing on the pound USD on the daily time frame. So anyway, for the hourly time frame, you can take a look at this one. You want to screenshot it if you want to. That's completely fine. Also, let me bring you the daily pivot, and I'll hide the Ichimoku cloud. You see where the pivot is? Price is basically unable to break through above the pivot level, so we do expect that correction lower towards support one. That's basically where nearly where our 127.2% is. So if I overlap all of them, you can see what's going on there. Why is there pivot there? Is actually within the Ichimoku cloud, so we're actually getting rejection from Ichimoku cloud as well as a pivot. So choice is yours, but it's there. In terms of target level, it's not going to be super flexible like the Aussie USD. But if you want to switch it into this, you could be targeting 1.19, and I think that's more than enough for this one trade. If you adjust it to 1.19, is that 1.19? Yeah, it's very far, guys. 1.19 is super far, right? You're looking at 1 to 7 risk to reward ratio. So yeah, it's for the Aussie USD and the pound USD. Well, what's making this interesting is that you can actually have a smaller stop loss. You could start with an hourly trade and then adjust this into a swing trade. So you can easily adjust this from an hourly trade, like an intraday trade, into a swing trade easily. That's just a lot of room for this one to go. Am I expecting like a quick drop towards 1.19? No, but eventually it will. Give it a week or two. If the daily time frame is triggered, there's a trade on the daily time frame, then yeah, it'll take some time, but it'll potentially get there. But I'll just be a realistic trader. And I like to take a look at it one time frame at a time. And even with this one, if you go for 1.2150, 15 or maybe even 1.21, that's still going to give you a great risk to reward ratio. That's nearly 1 to 2 risk to reward ratio for an intraday trade. And we're still within the realms of the pivot levels. You see that? I'm not even targeting support 2. Support 2 is below 1.21. So yeah, if you go by pivot, you'll get that as well. And this is me being very realistic. So we've got the Aussie USD that's potentially adjustable into more of a swing trade. We got pound USD, Euro USD, not so interesting for me. All right. So let me go through the questions. There was some question on some trades. Sorry, I'll be ranting on these 3 pairs, but if you want to know why, remember that dollar index that I always show every Monday on the Outlook? 105, 106, I expected a bounce. That bounce has happened. Okay, and right now the dollar index, it's really bouncing up really strongly. Okay, I think there was some requests on some exotic crosses, but let me just go through it. I know gold. You guys requested gold. We'll take a look at gold in a minute. If there's a question, newcomer, I wish to trade on 4 hours chart. Then before placing orders, which time frames to check? If you are wanting to trade on a 4 hourly time frame, there's no need for you to check other time frames. Just trade it on the 4 hourly time frame. Just don't use 4 hourly and daily. Don't use 4 hourly and hourly. 4 hourly, normally you use it by itself. Okay, sorry for the audio glitches, but it seems to be great right now. All right, we got requests for yen crosses later on. Yes, I'll cover yen crosses. There was some cat Swiss. Yes, there we go. I'll take a quick look at cat Swiss, and then I'll jump onto sterling yen. All right, cat Swiss. What's there to look at cat Swiss? What do you have? Javier, what do you want me to check on cat Swiss? To me, cat Swiss, I don't think there's anything interesting going on with cat Swiss. I think we are at the end of ABCD that I can see here. A little bit limited. We are nearly at resistance too, 74, 80, 75. You'd still definitely want to watch out for 75. If you're going long on cat Swiss, keep an eye out on 75. That would be your limit for the day. If you are short on this one, I think that's where your stop loss is. Your stop loss should be at around 75.25. But that's pretty much it for cat Swiss. Should you be trading cat Swiss right now? It's a little bit too late to go in long. Let me just illustrate that for you. I think we're pretty much done on cat Swiss. So it's a little bit too late to jump in long on cat Swiss. 74.95, 70. Yeah, this is pretty much done. In terms of extensions, we are beyond 200%. So nothing interesting with cat Swiss. I don't think it's actually going to be tradable. The only question is, do you have a long position? If you have a long position, then keep an eye out on 75 cents, and that's pretty much it. Okay, let's go sterling yen. Sterling yen, to me, I think I haven't talked about yen crosses in general, but let me bring you to sterling yen. We had a bounce from 160-150. Overall, we do bounce off away from 160 if we generalize this. 160.50, yeah. So we bounced off 160.50 and then 161.50. But price is actually within the Ichimoku cloud. Now, there's one thing I don't like about this. One, this one goes back inside the Ichimoku cloud, and then the stochastic still points to the downside. So what it's trying to say is The move might not be over yet. This could actually be stuck. This could be actually be in a little bit more of a range bound market condition for sterling yen. Let me hide that. Bring out the pivots. We bounce off support one. There's a potential for this one to go back to pivot, but that's pretty much it. Is it time to go for a long on the daily on sterling yen? I don't think so, unless you're going by this fib. But again, this fib is too big, too quick, too short. And if you take a look at where the 61.8%, 78.6% is, it's actually still within the Ichimoku cloud itself. So I don't like sterling yen at this point in time. Is there opportunity for sterling yen today? Take a look at the momentum here. What we are looking at is that we have just transitioned above the Ichimoku cloud. The momentum is actually pretty flat. Price is creating a new high, but the stochastic is not. So what I'm trying to caution you guys is this. It could actually fail at 163 and come back down. Okay, when it comes back down, it doesn't mean like it's a strong sell either. So what I prefer to do on sterling yen is actually to wait. Where do I want to wait? I want to wait for another correction happen. I want to wait for price to actually come back down to 161, 161.25. Ideally towards 161. I would wait for price to come back down to 161 and then go long there. Stop loss here. In terms of target, then I'll be targeting 164. But that's me. That's me on the sterling yen. In terms of hourly trade, intraday trades, just be mindful. It's going to be a little bit risky because we are actually going by this fib here. See where the 163 is? That's basically where the 127.2% is. So price could at any time fail and come back here. Now, if you do want to go short on this one, you can. You can go short there if you want. Just have your stop loss, 163.50 if you want. In terms of your target level, go for that around 61.8 where the ones near 161. Okay, so those are your options for sterling yen. You could trade that, but again, if you take a look at how it's going, I expect this one to come back down before it can actually go up. Do I want to short it? No, I don't want to short it because it's actually above the Ichimoku cloud. So I don't like going against the trend, especially not on sterling yen where it's actually not stable. Okay, someone is long Aussie CAD. Okay, let's take a look at Aussie CAD. You are long Aussie CAD. What should we look at with Aussie Canadian? I definitely don't want to be long Aussie CAD. That's my view, right? Let me bring this up into perspective for you with Aussie Canadian. Aussie Canadian just got rejected at the Ichimoku cloud. I don't want to go long Aussie USD. I don't want to go long Aussie Canadian. Now, if you take a look at this one, that's basically the current swing. I much prefer a short. Even if you're going short right now, I think that's still much more ideal because then I'm actually going to be targeting a return towards 86.50 for Aussie Canadian. That's my view, and that's how it is. So if you're long Aussie Canadian, just make sure you have your stop loss. Where's your stop loss if you are long Aussie Canadian? Because you are at risk. If I bring in the hourly perspective, the stochastic is also about to turn. Okay, you can actually trade a breakout on this one. If it closes below 89 cents, right? I'm sorry. Who's that? Ankit. My view on Aussie Canadian is that I don't want to be caught long Aussie Canadian. I don't want to be long Aussie Canadian at this point in time. Because right now, if there's an hourly close below 89 cents, so hourly close below 89 cents could actually trigger a quick drop once the momentum crosses over on this one. Okay. If you want to go by fib, if you want to go by an intraday scale, it'll be this scale here. That would be close below 50, 61.8%. just make sure you know where your stop loss is right now. If you do go long, if you're long right now, if you have a long position on the Aussie Canadian, I don't like it, but I mean if you do go long, just make sure your stop loss is actually below the swing low here. So yeah, I don't know what the target is. That's just actually pretty tough for this one to go long. Just make sure you have a stop loss, and that stop loss should be lower than 88.75. Okay, if you're long on Aussie Canadian. But Aussie Canadian, I would prefer to go for a short below 89 cents. And right around there, if it doesn't create a new high, that's basically where I want to go in. And then I'll go for 88.50. Okay, risk reward ratio about 40 to 55. If you have decided on the 4 hourly time frame, it's completely your choice. I like 4 hourly time frame. For if you're really new, 4 hours okay, right? It's not a matter of whether you're new or you're a long term trader. It's what you're comfortable with. I'm happy with 1 hour. I trade mostly using 1 hour or the daily time frame. Um, if you don't have the time to check in every hour, then 4 hours is fine, right? You can check in once every 4 hours. The whole point with different time frame is this: if you're trading on the hourly time frame, you need to check the chart every hour, right? For your confirmations and stuff like that. If you have the time for it, yeah, go for it. It's good practice. But if you don't have the time for it and you're happy, you're comfortable with 4 hour, stick with 4 hour. Doesn't matter what people say. It's all a matter of choice to you. Doesn't matter if you're a newbie or a veteran trader. It's actually irrelevant. But if for newcomers, I don't suggest going down below the hourly time frame. A lot of newcomers actually started with 15 minutes, 5 minutes, 1 minute, and I think that's kind of really bad. It's actually really bad for your psychology. Okay. Let's take a look at. Do we have time? Yeah. Let's take a look at the dollar yen first, just to give you a quick rough guidance. I know some of you got this update, but we actually see that bounce from 130, 135, and 132. We are actually moving above the Ichimoku cloud. Stochastic is actually turning up. So again, this is in queue. I want to go long dollar Japanese yen. If the daily time frame, if the daily actually closes above the Ichimoku cloud. So what I'm trying to say is, if price goes above 134, I would actually like to go long dollar yen. I don't need to target 140. I'm happy to target 138. It's still gonna give me a 1-to-1 risk reward ratio. 400 pips of range to the upside and to the downside. Now, if you take a closer look on the hourly time frame, we have transition. Above the Ichimoku cloud, stochastic just turned up. I think we could actually trade a potential breakout on this one. You could actually trade on the hourly close above 133.90. Again, that's basically 134, but it's completely up to you. I would prefer to go long right now on dollar yen, as long as my stop loss is here. Now, if you take a look at the risks on this one, the minimum risk for the dollar yen is actually 138.40. So it's actually a pretty huge risk. Now, in terms of target, you're pretty much flexible, but if you go by fibs, you're still going by this fibs here. So pick a choice. You can go for 127.2, about 135.75, or 135.50. It's completely up to you. But to me, in terms of risk reward ratio, is about 1.5. I think this is actually great, and I'm done. Like with dollar yen, Aussie USD, pound USD, I'm happy to take this trade because these are trades that you can actually potentially adjust into more of a long term trade. But all this trade does have a stop loss with them, so the stop loss is okay. It's not too wide of a stop loss, so that's pretty much it in terms of what I can say with the dollar yen. Okay, next we have gold. There was some requests on gold. Let me just get some water. Okay, so yeah, gold. I'm happy to look at this one and say, you know what, this bounces off 61.8%. Did it touch this low? Yes, it did. It does 1786. So we are done. Correction is done. Um, so the market has actually done this break below support, come back to test it, and we are likely projecting lower on gold. So this is gold daily. I like where it's currently getting rejected at. Just waiting for the stochastics to cross over, and it's done. It's basically just gonna be like the Aussie USD and the pound USD. But for gold, I don't trade gold. But if you do want to trade gold on this one, you want to wait for price to come back down below 1750 at least. So 1750. Okay, that's basically your queue. If it does break below 1750, then that's where your stop losses is. If it doesn't create a new high, whatever it is, you want to have it at around 1800 or 1795 for your stop loss. Your target level, ideally you want to be targeting lower than 1680, but remember 1700 is going to be a tough level to break. So look at about 1-to-1 risk to reward ratio. That should be it. You're probably going to be looking at about 52 up, 52 down for gold. Sterling CAD. Let's take a look at Sterling CAD. We haven't taken a look at Sterling CAD. Sterling CAD daily falling wedge. Do we have a falling wedge? We definitely don't have a falling wedge. We do not have a falling wedge on Sterling CAD on the daily. Sterling CAD to me it looks pretty normal. A potential 61.8% rejection. I'm happy to go for a short. There is no falling wedge on Sterling CAD on the daily. I just don't see the falling wedge. I mean you definitely cannot classify the whole move to the downside as a falling wedge. That's basically a downtrend. That's not a falling wedge. There is no wedge, and I mean, if you take this like pound USD, I'm happy to go short pound CAD as well. Once the momentum crosses over on the daily, then yeah, I'm happy to go short pound Canadian. You can actually go short now, you know, because it actually closes below 23.6%. So yeah, just make sure your stop losses are there. In terms of target level, you want to be looking at around 1.53, not 1.52. So keep an eye out on this one. Risk reward ratio about 1-to-2. Yeah, seems pretty okay with me. So I'll leave that for you. I think this is actually a potentially good trade as well for pound CAD. Pound CAD on the hourly. Let me just double check. Not yet. Not yet. Pound CAD on the hourly, I don't like it yet. It's not below the Ichimoku cloud as of yet. It just closed below the Ichimoku cloud, but no. On the daily, yeah. I mean, if you consider this as a swing trade, then I'm quite okay with this one. Although target level, I want to adjust it maybe around 1.54 instead of 1.5350. So about risk reward ratios, 1.6, yeah, 1.5. Yeah, I'm pretty okay with dollar yen. I mean, with dollar yen, if you take a look at the daily, I just need this to actually close above the Ichimoku cloud. In terms of bounce off and whatever, the confirmation is already there. I mean, if you go by Fibs, right? I'll hide the Ichimoku cloud, and if you count the Fibs with me, this is beyond 23.6, so you can actually go in long right now on the dollar yen, and that's completely fine. I just want more confirmation because I'm planning to hold this longer. You know why? Because I want to be adjusting this a little bit more, maybe towards 139, 140, and potentially even higher. Because right now, the indication for the dollar index and the dollar yen is actually really pretty much the same. So there's actually a lot more room for the dollar index. So that basically means the dollar yen has a lot more room to go as well. All right, one more euro yen, and then we'll wrap it up for tonight. Euro yen, I'm actually pretty okay for this one. I don't expect this to be a really strong uptrend. I really expect this more on a choppy trade. But when we talk about choppy in terms of range, it's actually pretty huge, right? We see that bounce from 134, and that's pretty much done. So there's actually a new fib that you can actually draw. In terms of target, you're going to be looking at a potential correction towards 61.8. So if you do want to go long euro yen, those are going to be a target level. You could potentially see a return towards maybe 138.50. Is that going to give me a good risk reward ratio? I don't know. Let me just check. Not great. I mean, it's nearly 1-to-1, but it's not 1-to-1. So it's huge, right? The range is huge. Now, if you go on the hourly time frame, we are above the Ichimoku cloud. I think, yes, there's room for this one to go towards 137. I think we are actually within the cycle right now. So around 136.50, it's going to be your intraday resistance for euro yen. 136.50 and then 137. If you are going long euro yen, those are going to be your two target levels on the euro yen. If you're planning to jump in, make sure your stop losses are below 135. Risk reward ratio is not going to be great, but those are your options. It's going to be huge. Like you're going to be risking about 100. The Euro USD, Euro Yen, Sterling Yen, I don't quite like them. They're more of a range bound market condition. It's not like the dollar yen. It's not like the pound USD. It's not like the Aussie USD. Euro USD, Euro Yen, Sterling Yen. They're really range bound. With Euro USD's range is actually small. That's fine. Euro Yen and Sterling Yen, the range is actually really huge. We're looking at about 200 pip range here. So if you're not wanting to risk a lot, this is something that you need to consider for Euro Yen and Sterling Yen. What are the conditions to trigger the threshold in the rolling settlement in T+2? Why are you talking about T+2 settlements here? We're not trading stocks, you know. You guys are trading CFDs. Settlement is pretty much instant. Okay. Any other questions for tonight? Anything that we haven't gone through yet? I'm pretty sure I went through everything. Maybe dollar Canadian. I haven't gone through dollar Canadian. Dollar CAD, I don't think it's time yet for dollar CAD. I mean, if you take a look at it from a daily perspective, the bounce is a little bit weaker for dollar Canadian. I think we have support coming in at 1.28, 1.2825. No, 1.2830. You mean mark to market, not market to market? Go ahead, Nihit. You can throw in broker side question if you want to. I'll entertain you on this one. Okay, dollar Canadian 1.2835, still bouncing strong, but the bounce is not that strong. I would wait for stochastics to turn up, and then that's basically where I would be looking for a potential long. But at least on the hourly time frame on the dollar Canadian, I'm not seeing it at this point in time. Daily wise, it's still within the Ichimoku cloud. If you take a look at the candle, it's actually bearish. It's actually within inside the Ichimoku cloud. So yeah, in terms of stochastics, I need this to turn back up above 20 and then all good. But right now, I don't think it's quite done yet for dollar Canadian at this point in time. Let me just double check. Yeah, dollar Canadian, it's not quite done. It's still within the Ichimoku cloud on the daily time frame. We don't have anything clear on the hourly time frame. We only have support coming in at 1.2835. As long as it doesn't close below 1.2835, I think that's the key that you need to keep an eye out for. If it does close below 1.2835, there's a high chance it could actually transition below the Ichimoku cloud. So right now, I'm expecting this to hold and potentially bounce up there. How much can we hold a profit position? I don't know, man. It's up to you. You can hold it for whatever you want. Okay, broker side question. If Team Octa wants to answer that for me, that will be great. I don't think I'm at the liberty to answer that, but I don't quite understand your question on your mark to market. Margin lost his face. I don't know what you mean by that. How much we can hold a profit position? It's up to you. You can hold it for as long as you want and however big you want. Your profit position would depend on your equity size anyway. So it's not a spam question, but don't spam it. What I think Albert is trying to say is don't spam 10 of the same questions in succession. Type it once and I can read it fine. So yeah, be clear with your questions. Okay, we done tonight? No more questions? We answered dollar Canadian, we got pound cat, we got euro yen, we've got everything, we've got gold. What do you think about stocks and risk assets will go? Well, if I'm looking at a potential bounce in dollar index, then I expect the risk assets to actually be lower. I expect risk aversion to kick in, and that's why I expect the continuation to the downside for the Aussie USD and the pound USD. Therefore, for US 30, it would potentially be the same scenario. We did talk about the US 30, right? This one here, let me just bring it back again. The current US 30 scenario, it's basically very similar to where it was earlier this year. There. We're actually transitioning above the Ichimoku cloud right now. It's actually having a hard time for it to transition. Is it time for a quick drop in US 30? Probably not. I think we're going to see that move happen in the US dollar and the currency market first. US 30 might follow suit probably on Friday with the NFP numbers. But provided we saw the dollar strength gaining before the NFP numbers. Okay? But for the US 30, where is it? There we go. So this is on the hourly on the US 30. We are actually still trading above pivot level. This, if you take a look at where the resistance and support are, 32.7050 and 32.500, we're looking at around 250 points of range, right, for the US 30. Now, consider this. Price could, the US 30 could actually still push up from where it is right now. When the US market opens, we're probably going to be looking at a potential around 150 points to the upside, and it will still actually fall within the range. All in all, I expect the range to not last so long. It could last before the NFP. Basically, this is basically going to be the range for today and tomorrow. If it doesn't move up too high, then there's a higher probability it's actually going to get rejected. The key point with this one is actually a daily close below 32.5. So if there's actually a daily close again below 32,500, what we need to see is actually a maintenance price maintaining a position below 32,500. If we do see price basically below 32,500 constantly, then the stochastics is going to turn and become overbought, and then that's where riskier assets is going to be. That's where the equities market is going to be. We are probably going to be looking at a market that's going to be risk averse again. That's why I said earlier, I think I mentioned this last week, I mentioned this also on the Monday's webinar, we're not done. We are actually starting to see more of a volatile market between August to August to October. We're probably going to be in for a really volatile market, especially in the month of August, because there's a lot of unknown in the month of August, and then September is where the FOMC is going to make their next interest rate move. Is it going to be 50? Is it going to be 75 points? Look, basically, it's going to be a very choppy 2 months, and just be prepared for it. We are at the beginning of August. We are looking at some move that we can take. I will take that move because those might not last for a long time. So be prepared for a really choppy market in the next month or two. This is on TradingView. Which pivot indicator that I use? The pivot point. This is actually. Let me just bring it out. Yeah, it should be on my favorites. Why is it not loading up? Okay, Nihid, let me talk about T+2, yeah? In CFDs, there's no T+2 settlements. If you buy X stock equities, then yeah, there's T+2 settlements. Okay? Market-wide circuit breaker, which bring halts to the movement of BSE and NSE as DMAT being digitized. I find those questions is actually irrelevant to our sessions right now. But just to let you know, we are talking about a CFD market where we don't actually deal with T+2. Okay, so I've already given that answer many times, and let's just get on with our life, shall we? Okay, my favorite's not loading up, but it's actually a pivot standard. It's not showing up here either. It's actually pivot point standard. It's actually called pivot point standard on TradingView. Pivot points on MT4, you need to use a custom indicator for that. Again, there's going to be a lot of custom pivot indicators out there, and I actually haven't classified one that's actually really, really accurate or really, really good. Again, it's up to your preference on this one. Okay. All right, guys. I think that's time for tonight. No further questions? If not, then we can wrap it up for tonight. Okay, guys. Hey, have a great evening. Stay safe and good luck with the trades. I'll see you on Friday where we had our beginner. We are actually gonna have our beginner webinar. Other than that, I'll see you next week.